My name is Aditya Balasubramanian, and I work in the College of Arts and Social Sciences at the Australian National University as a senior lecturer in history. It is my great pleasure to introduce today's speaker, who is Dr. Michael O'Sullivan, a dear friend of mine and colleague. He is assistant professor of South Asian history at the University of North Carolina, Chapel Hill. He's a Tar Heel, for those of you who subscribe to the lingo. It may not be familiar to more of our Australian listeners, but that is also the institution where Michael Jordan first played college basketball. It was a long time ago, but it's probably worth knowing as your factoid for the day. This is an event called Before Islamic Finance. It's about the rise of Muslim private banking from the mid-19th century in South Asia and the world. This is an event of the ANU Capitalism Studies Network, of which Melinda Cooper, who's online today, Will Bateman are the co-founders. We're interested in studying kind of various dimensions of kind of history, present, and possible futures of capitalism from an interdisciplinary social scientific perspective. We're open to affiliates from across the university, as well as folks from overseas, like Mike himself, who are affiliates of our network. Just a small thing is that if you could kind of keep yourselves muted, we do have the ability to kind of ask questions after the event. If you could just enter it into the chat function, so it's a little less kind of cumbersome. And just so you know, we're recording the event so that people who are not able to join us are able to will be able to listen to Mike's wonderful words and some of my garbled messages about what's going on. But let me say a little bit about our speaker, who I've been friends with now for several years. Mike works on various aspects of modern South Asian history, but also the history of Islam in the world. He is the author of the highly acclaimed No Birds of Passage, A History of Gujarati Muslim Business Communities, 1800 to 1975, which is a pioneering intervention, I think, into both kind of legal and economic history. It looks at the Jamaat, or the corporate form, in which the three kind of key South Asian Muslim communities, the Khojas, the Memons, and Bohras, sort of used as a kind of organizational framework, but also as a sort of legal mechanism as they pursued kind of capital accumulation across the Indian Ocean world, disproportionate in importance to their very small size. And the book is also, apart from being a sort of breathtaking intervention that looks across sources in several different languages and is rather wide in its temporal scale, right? We're all familiar with dissertations that go from like 1926 to 31, right, as opposed to 175 years. It is also a work that bridges the colonial, post-colonial divide rather well. And as somebody who myself is focusing on the period after 1947, especially impressed about the way that he does that, and he kind of looks at the treatment of these communities, particularly in Pakistan after independence, which is really quite special. So Mike's work in No Birds of Passage emerged from his doctoral dissertation, which is a kind of 900-page, one of those sort of major German aspiring works. And the second book from that dissertation is actually forthcoming with Harvard University Press, and he's going to speak about that today. So before I start, I also want to acknowledge that we've been supported by the School of History at ANU. We've been supported by the College of Arab and Islamic Studies. And I not normally people do this in the beginning, but I want to do this before kind of Mike starts, just to acknowledge that we meet on the ancestral lands of the Ngunnawal and Ngambri people, and acknowledge that their sovereignty was never ceded. So without further ado, Mike, please take it away.
Aditya, thank you so much. I mean, many of the things that you said do not redound to my credit, but I hope, if anything, you'll take away a couple of factoids more than the fact that Michael Jordan played basketball at UNC Chapel Hill. But thank you, everyone, for coming. Thank you, Aditya, for having me and for always being unfailingly generous. But also, I want to extend my gratitude to Will, to Melinda, but also a couple of other people who I see here on the list, like Maria Mendoza, who did so much to make my presence here a reality. So I'll speak for roughly 45, 50 minutes about the new book project, and then we'll open up the floor. Okay. So I'll share the screen and we'll dive in. All right. So here's the plan for today. I'm gonna walk you through the book manuscript, but for the most part, we're gonna focus on the South Asia angle of the book. We'll have a couple of geographic tangents throughout the course of the talk, but mostly South Asia will assume center stage. And I also want to discuss towards the end a couple of loose ends with the book. So it's about to go out to the external reviewers. So now is a very good time for me to start soliciting a lot of feedback. And I think that the main sort of issue I have with the book at this current moment is the lack of a sort of overarching theoretical framework that can make sense of all of these quite interesting empirical studies. But there's not this sort of connective matrix that can bring it all together and give it meaning. So any critical feedback you'd have would be much appreciated. Okay. So the initial jumping off point of the book is the founding of the Islamic finance industry in 1975. So the industry marks the beginning of a very transformative moment in the history of modern global finance. So over the past half century, the industry has acquired roughly $6 trillion in assets. So it's a massive industry with a global reach. But the core assumption of Islamic finance is this idea that Islam bans all forms of interest. And we're going to see that this idea has been propagated for roughly 2 centuries by colonial officials, by Soviet ethnographers, by modern financial wizards. But really, it's a concept that has a very contemporary history, and that's what one of the main themes of the book is. And a larger intervention is this notion that the particular form that Islamic finance assumes in the 1970s is actually a model that's predicated on a repudiation of pre-existing models of Muslim banking that had existed throughout history, and in particular of the legal arguments that had justified those forms of private finance. Okay? So all of this will become clear, hopefully, over the course of the talk. So the 3 general questions of the book are these. So the first is, when did banks become a vector of divergence between, say, Northwestern Europe and other parts of the world? I'll discuss that in greater detail in a minute. The second is, what role did intra-Muslim debates about rent on money play in the development of Muslim banks in Africa and Asia in the 20th century? And the third is, how did this model of Islamic finance, which is founded on the idea of an interest-free, debt-free equity form of finance, how did this first emerge among Muslims in colonial India and then spread throughout other parts of the globe? So the historiographical inspiration for the book is, there's multiple sources actually. So one of the things that I'm riding the wave of are a number of histories that have been published in the past decade and a half that take a very heterodox approach to the history of banking. So here you see a number of very important studies that have really kind of gotten beyond these corporate hagiographies that exist within much financial history to look at, in some cases, the dark underbelly of modern finance, to look at the racial dynamics of modern finance, but also in the case of a book like Dark Matter Credit, which you see here, to look at, from an institutionalist perspective, how other forms of finance that are not banks also have contributed to processes of industrialization. Okay? So if you think about what I'm trying to do in a more general term, it's to write a history of financialization outside of the capitals of capital. So instead of writing from the perspective of, say, London, New York, Geneva, Tokyo, the idea is instead to write from the perspective of Riyadh or Karachi or Jakarta or Hyderabad. Okay? So I like to think of Aditya's book as a contrapuntal history of neoliberalism. In a similar way, I'm trying to position this book as a contrapuntal history of financialization, in which the narrative of Northwestern or North Atlantic finance is told in parallel with this story of Islamic finance, and of course, paying attention to the particular moments in which those two stories converge and also diverge. Now, there's a fundamental issue in telling this story, as there was in my first book, of the asymmetry of the archives. So if you're writing a history of Barclays, or if you're writing a history of HSBC, you can go to the bank, you can access their archives and get a pretty consistent catalog of records. Here, it's a very different story. So much of the book is built on a series of fragments. So there will be a reference, for example, to a bank in an early 20th century Russian Muslim newspaper. And then I'll attempt to follow the thread, but there's no central archive that I can consult for this. One of the things that is a partial workaround is the fact that we have these resources like archive.org, but there's also asymmetries built into that, because if you take just this particular screenshot here, this is an Urdu economics textbook written in the 1920s. And even if you don't know a word of Urdu, you can tell from the title that the way it's been transliterated is probably not correct. And so part of the challenge for anybody working on these histories of finance from the perspective of the Global South generally is the fact that you have resources like archive.org, but you have to put in a lot of the labor of going through the tens of thousands of books that have been scanned, but oftentimes the way that they've been put in on the site and their metadata is completely impenetrable. So this is one of the logistical challenges of writing these histories. Okay. So this very busy slide gives you an idea of how the book is structured. Okay. So Bankers Without Banks is a concept that we're going to unpack in a moment, but it's the main thesis of the first chapter is that banking and banks had quite close institutional connections before roughly the first or second decade of the 19th century. And from that moment, banking became a vehicle of semi-colonial or colonial divergence. Chapter 2 is interested in essentially a process of financial involution and a segmentation of credit markets occasioned by the spread of banks to the semi-colonial and colonized world. Chapter 3 is really when we start to get into the heart of the story, because that's the moment when you see the first Muslim banks appearing. So the geography of that chapter moves around quite a bit. So we have the Tsarist Empire, we have Habsburg Bosnia, we have the Ottoman Empire, we have colonial India. But then the subsequent chapters see some additional geographic pivoting, but little by little, the geographic scope of Muslim private banking begins to contract. So for example, in chapter 4, you'll see the Ottoman Empire drop out, you'll see the Tsarist Empire drop out, you'll see the Habsburg Empire drop out, but then you'll see new geographies come up, say the Dutch East Indies, or Palestine, or Iraq, or Saudi Arabia. But the whole thrust of the book has a very strong connecting thread, and that is the South Asia dimension. So there's always a sort of double act within the narrative of the book in which I focus both on South Asia as this particular epicenter of ideas, but one that's constantly in communication with other geographies. And one of the big challenges in the first book and in this book is the limits of analogy in economic history. So I like to put on this particular series of screenshots from this documentary produced in the 1960s on India, L'Enfant Fantôme by Louis Malle, in which there's this particular scene where he goes to the stock exchange in Bombay, and this is something I've been working on the side, and has this very interesting series of remarks in which unlike, a number of other people who have gone to the Bombay Stock Exchange and filmed it and, put together a documentary on it, he draws a very interesting analogy between the kind of physical activity that occurs within the space of the stock exchange in Bombay and also what's occurring in Paris and Milan, right? So one of the things that I'm trying to do in the book is to say, okay, in no sense is this history of Muslim finance an esoteric topic or something that is cut off from other global processes of financialization, but it's very much intertwined with it, okay? But nonetheless, there is a problem of drawing analogies. And in the case of the first book, as Aditya had mentioned, there's this effort, retrospectively, might not have been so successful, of drawing this analogy between the Jamaat, which is the castes or Islamic corporation that these three communities that I examine, all of them have this. Think about it essentially as their central communal institution. But in the book, I try and use it as an opportunity to think about what a corporation looks like in an Islamicate setting. So in the economic history of the Islamic world generally, one of the emphases has always been that an endogenous form of the corporation never developed. So this was my attempt to kind of come up with a challenge to that. But again, perhaps not entirely convincing, because in drawing these analogies, there is a number of fissures that essentially mean that it's not a perfect simile, okay? And that issue appears again in the second book. So one of the big conundrums that I'm trying to grapple with is this idea that there is very sophisticated forms of banking, but there's no banks. So there's a very famous article written by a Princeton historian in the 60s, particularly on this point, that where he says the Islamicate world had banking that had developed a very complex form, but you never see a movement into brick and mortar banks before the late 19th century. So the implicit argument here is that this operated as a mechanism of divergence between, say, the late medieval Islamic world and medieval Europe, okay? So instead of asking that question and repeating that story, which again, many people have subsequently, grabbed onto and made a lot out of, that is, why was there a failure to create banks? The idea is instead to say, okay, when do banks become this vehicle of divergence, okay? So just to sort of elucidate this a little bit more. So the idea that banks had only emerged in Western Europe in the late medieval period, and that this was the springboard for economic growth and essentially the West's divergence from the rest, is an idea that, because of a number of studies that have appeared over the past generation or so, is one that has increasingly been thrown into doubt. So there's been a recognition, for example, that banks in Italy in the medieval period look very different from banks that develop in the Dutch Republic or Britain in the 17th century. But even as you extend the timeline forward and you get to the late 18th century, early 19th century, and look at something like the Industrial Revolution, there's very little use of bank capital in the first decades of the Industrial Revolution within Britain. And there's not really any sort of dependency on bank credit to lift enterprises up or to initiate new industries. Right? So, and in fact, this trend extends well into the late 19th century, where even in a setting that is paradigmatically heavily banked, such as, say, late 19th century France or Britain or Germany, most enterprises remain unbanked. And you have a reliance on things like peer-to-peer lending or returns on trade. So all of this for me is a way to sort of re-examine this argument that banks in the Islamic world, their absence has been responsible for long-term financial underdevelopment, okay? So to kind of get a little bit into the weeds on this issue of the intellectual history side of things. So again, I had said that there's this problem in drawing analogies to say that the Islamic world had institutions that were like a corporation or were like a bank, can only take you so far. But there's another analogy that has been drawn time and time again, and I try and push back against it in the book, and that is this idea that Islam bans interest or Islam bans usury. Okay, so you hear this bandied about quite a bit. It's again, as I said in the beginning, a justification for the Islamic finance industry today, and it's also a way of saying that Muslims need essentially special mechanisms to enter into the formal financial sector. But the problem is that this dichotomy between interest and usury, as I argue in the book, has a very Western European genealogy to it. And it would have made no sense at all to any Muslim jurist before that period. And in fact, it's only in the late 19th century when those two categories are assimilated and then essentially set the stakes of the discursive debates that happen among Muslims about how to interpret this concept that's there in the Islamic foundational sources, that's there in Islamic law of riba. Now, riba is a term that literally means addition, but if you go into the legal corpus, if you go into all of the commentaries on hadith, the deeds and sayings of the Prophet Muhammad, there is a constant debate about what the actual remit of this term is. And so I try and bring these debates into the picture in order to argue that there is no essentially normative a priori intellectual blockage that is preventing Muslims from creating banks. But eventually what's going to happen within South Asia first in the colonial period is the birth of this maximalist interpretation in which riba is equated entirely with not just usury, not just extortionate interest, but all forms of interest. And this is a crucial shift that will then become circulated throughout other parts of the Islamic world and around the interwar period, but especially in the post-colonial era. So again, I've already hinted at this a bit, but the book does try and take quite a vast geographic expanse into focus. Now, the point is that, again, there is no special form of Muslim banking that exists. Instead, I use the term Islamicate banking because in any of these environments in which Muslims are trying to enter into formal finance, create their own institutions, there are always non-Muslims involved. But there's also a very important process of imitation. So for example, this article is from an early 20th century Russian Muslim newspaper, and it discusses a Muslim bank that had recently been founded in China. Now, there's two things that are very interesting in the piece. One is that it references an article produced in an Ottoman Turkish publication that is talking about the creation of this bank. So again, Russian Muslims are reading Ottoman Turkish newspapers and they're reading the financial section and saying, hey, there's this bank that's been created in China. But the authors of the Russian version also go on to say that what's very important in the creation of this bank in China is the fact that the religious scholars, the traditionalist religious scholars known as the ulama, they have given their support to the bank. So this is seen as a way of sort of overcoming any potential religious scruples among local Muslim populations within the Tsarist Empire who would say that, for example, modern banking is impermissible according to Islam. So from there, and this is in particular the story that's told in chapter 3, I look at how you see this big leap, especially right before the First World War, in the creation of Muslim banks. So you have them in the Tsarist Empire, as we saw. You have them in the Ottoman Empire. But in particular, there's this very fascinating example from late Habsburg Bosnia, which, again, you can see there on the right, one of the shareholder meeting reports produced in 1913, in which the Habsburg state is deliberately giving its support to the creation of this Muslim central bank. And it's a way from the Habsburg perspective to, in a sense, solidify their rule within the country, not least by preventing the continued dispossession of Muslim landowners within the province. And this agrarian dimension is very important in fueling the rise of Muslim banks in all of these settings, because there's this fear in the early 20th century about continued land dispossession of Muslim elites. And the creation of a bank is a way, in their minds, to stem the tide of these wave of dispossessions. Now, what's really crucial in both the Ottoman case and in the Bosnian case, which we will not see in the colonial Indian case, is that you have explicit state support. So here you have a graphic showing you the vast growth of private Muslim-owned banks in the Ottoman Empire right before the First World War and during the First World War. Now, essentially, just to kind of give you a very quick overview of the Ottoman financial system in the last half century or so of the empire, there is a French and British state and commercial bank that is set up in the 1860s called the Imperial Ottoman Bank. And it essentially is a bank that is in charge of the state's finances, but it also has a number of branches throughout the empire. But there is no sort of endogenous tradition of Muslim banks that emerges in this period in any real sense. There are a number of banks that are founded by Ottoman Armenians or Ottoman Greeks or Ottoman Jews, but the Muslim footprint is very low. Although there is an awareness that the Muslim communities do need to create banks. And so here you have, during a period of explicit Muslim economic nationalism that is sponsored by the Ottoman state, a big growth in these banks. However, what happens over the course of the end of the First World War, this period of the collapse of these three land empires, is that many of these models of Muslim banks disappear. So one of the big arguments in the book is that in all three of these settings, you had institutionalized forms of Muslim interest banking that were deemed permissible by religious scholars, that had a lot of shareholders and clients who were willing to put their money into the bank. But then with the collapse of these states, most of that disappears. It disappears, of course, in the Soviet context because of the system of collectivization, the creation of a top-heavy statist economy. In the case of the Turkish Republic, it disappears because of a deliberate effort by the state to stamp out any vestiges of Islam within economic institutions. In the case of early Yugoslavia, the bank that I just referred to, the bank in Sarajevo, that merges with a local Croat bank. So little by little, you're starting to see these examples of Muslim banks disappearing from the scene. Although you will, as I said earlier, you will have other banks in different geographies begin to appear. So among the most famous are in Palestine, where you have a bank founded by a figure named Abdul Hamid Shoman called the Arab Bank, a bank that still exists today, although it's headquartered in Jordan. And then you have Bank Misr, which is an Egyptian bank that is seen as a sort of cosmopolitan nationalist institution, but by many contemporaries, it's also seen as a Muslim bank. Okay? So now we're going to get into the heart of the matter, and that is the South Asian dimension. So I've already stressed the fact that there is a very strong emphasis of trans-imperial imitation. So if a bank is founded in the Tsarist Empire by Russian Muslims, then a very similar phenomenon will be imitated in a place like colonial North India. So here you have an example in an Urdu newspaper, Urdu and English newspaper, the Aligarh Institute Gazette, where there's a discussion of this bank that has opened up in St. Petersburg, and there's a sort of appeal that's made to various Indian Muslim capitalists to follow suit. In other words, we have all of these capitalists who have moved into trade and industry. Now it's time for Muslim communities to do the same with finance. Okay, so I want to back up, though, a bit from that and look at the more macro picture in order to understand why it is South Asia that becomes the embryo for a lot of these ideas governing Islamic economics, Islamic finance, Islamic banking. Right? So the first fact is that banking in the colonial period is much more hierarchical and racialized than in any other part of Islamic Eurasia. Okay? The second is, as we're going to see in detail later, there's a abrogation of any interest rate caps in the 1850s, such that over the course of the rest of the 19th century, but in particular in the 20th century, a Muslim economic populism develops around this issue of usurious money lending. And there's a real attempt to articulate what a modern Muslim banking form will take because of this particular phenomenon. The third factor is just the sheer profusion of different interpretive communities that arises after the 1857 rebellion, such that you have all of these associations, all of these members of the intelligentsia who are popping up and claiming that they are the most authentic interpreters of Islam. And they're not only discussing, quote unquote, religious ideas, but they're also articulating rival notions of the economy. And this is something that is quite novel about the book, is that it's trying to really incorporate these materials to understand the intellectual dividing lines that existed among Indian Muslims over this issue of banking. And the fourth reason is, as I've already hinted at, the fact that all of these other models that have existed hitherto are gone. So all of the models from the Russian Empire, the Habsburg Empire, the Ottoman Empire are gone. And so in the interwar period, there's this effort to find a new series of models that can give a future form of a Muslim bank some sort of institutional anchor. Now, beyond all of the points that I've just discussed, there's, of course, factors that are endemic to the colonial economy. One of those is the fact that there's this very intense process of deindustrialization. So here, the figures more or less speak for themselves, where over the course of about 130 years, South Asia's proportion of manufacturing output goes from roughly 25% of the global pie to roughly around 2.8%. And I try and show in the book that finance as it had developed in the pre-colonial period within South Asia was tied in particular to this economy of manufacturing. And so once that disappears, and then you see the shift of more and more Indian communities into agriculture and away from production of manufactured goods like textiles, that takes as its casualty the banking sector as it had developed. So you start to see credit markets shrink, and then the East India Company and later the Raj also have this deliberate policy of subordinating and defanging local bankers. Then around the 1830s, 1840s, although the actual process is full of interruptions and full of failure, you start to see the implantation of European exchange banks in the country, okay? So that is responsible for creating this very strongly demarcated hierarchy of finance. Now, if you see in the couple slides on, this is essentially what begins to emerge. So at the very top of the pie, you have the presidency banks, which are more or less the bank of state for the Raj. The middle tier is taken up by the European exchange banks. And then underneath them is the sector that makes up the vast majority of the financial economy, and that's the sector of indigenous banking. Again, it comes in a variety of forms. There's many different institutional patterns. But the issue is that our visibility into this particular strata is very limited. So we can get into it a little bit through the use of materials and languages like Gujarati or Urdu or Hindi, But nonetheless, it is an issue in telling this story in the manner of a thick description because of some of the asymmetries of the archival material that I've already mentioned. So again, there's these very strong polemics that begin to develop within the Indian Muslim intelligentsia around banking. And they're polemical to a degree that doesn't have a parallel really in any other part of the Islamicate world. Now, there are debates, say, in the Russian Empire among Muslims about banks, but nothing as concentrated or voluminous as you see in the colonial India context. So these are two examples from the 1920s. So on the left, you have a work titled Taqsil al-Ikhwan an al-Riba fil Hindustan. So a warning to the brothers about the dangers of usury in India. And then, so basically a book that the title of which pretty much speaks for itself. And then on the right, you have a book titled The Problem of Interest and the Future of the Muslims, which is trying to make the case for a Muslim embrace of modern interest banking. In other words, the author of this work, who also creates a newspaper that is entirely dedicated to this concept, and in fact, the poster for today's event comes from an issue of that newspaper, in which he says Muslims within India have done irreparable economic damage to themselves by not actually entering into the banking sector to the same degree that their non-Muslim neighbors have. So this author is really invested in this effort to articulate a new form of Muslim economic subjectivity in which modern banking is more or less second nature. Okay. So there's from the turn of the 20th century, a big push for the creation of domestic banks. Okay, so this dovetails with a movement known as Swadeshi, or homegrown, homemade, and it takes a variety of forms. So on the one hand, in agrarian settings, you have a big push for cooperative credit. In cities like Calcutta or Bombay, or Ahmedabad, you have a big push for the creation of formal banks. But what's driving this is not only this desire for economic self-sufficiency, but also this growing perception of a Hindu-Muslim wealth gap, particularly within finance. So the fear begins to develop within certain segments of the Indian Muslim intelligentsia that Hindus have a monopoly on banking. And this monopoly needs to be broken by Muslim capitalists or the Muslim public writ large. Okay? So there is, in these years, a partial breakthrough of sorts. So in Lahore, in 1908, a Muslim bank is founded. However, the subsequent history of this bank is quite convoluted. So it fails amidst a larger failure of banks that occurs in India between 1912 and 1914. But the bank is later resurrected on a couple of different occasions. However, the bank, despite lasting really for on and off for another 30 years, is never able to gain much legitimacy within the wider Indian Muslim public. And this despite the fact that the proprietors of the bank have these quite quixotic ideas of expanding their footprint to Mecca and Medina, opening up branches. And in fact, they go to the Ottoman Empire and have meetings with the Grand Vizier. Then when the Saudi regime comes in, they go to Riyadh and have these negotiations. But in each case, they're rebuffed. But even within India, they're struggling to gain legitimacy for the idea of their bank. And the reason why they're struggling is, as I've suggested already, that there's this big profusion of different ideas about the legitimacy of banking. Okay. Now, one last very important legislative development that is occurring in these years is an attempt to actually turn back the clock on that act that had done away with interest rate caps way back in 1855. So I'd said that had birthed over the long term a particular form of Muslim economic populism that had been, in some cases, aimed against Hindu moneylenders. And right around the First World War, this term begins to pop up within Urdu newspapers, within Urdu literature of the Hindu Shylock. So here you see an example from a newspaper published by Abu Kalam Azad, the very famous Indian Muslim politician, in which he's describing where this term comes from. But it's a very interesting appropriation of European anti-Semitic ideas of the moneylender that's then projected against Hindus within South Asia. So this attempt to turn back the clock on the 1855 abrogation of interest rate caps ends up in success. There's this creation of this association that mobilizes support throughout North India in order to do away with all to do away with the act and to reverse it. And eventually interest rate caps are reintroduced in 1918 by the colonial state. However, for the next 3 decades of colonial rule, there's no discernible change in interest rates within the country. So this is seen by many members of the Indian Muslim intelligentsia as an incentive to come up with an alternative idea for future forms of Muslim banking. Okay. So we've covered this. I'll skip ahead to the next slide. Okay. So where do these ideas begin to crystallize? The epicenter is in the princely state of Hyderabad. So there's a number of reasons for this. One of the principal reasons is that the Nizam, who is the wealthiest of all Indian princes, founds a university around 1919 called Osmania University. At Osmania, there is a department of economics that is created, and it is an Urdu vernacular department. So you start to see the production of all of these new Urdu textbooks and the creation of an academic discipline of economics that really had no parallels in Muslim learned circles within South Asia before this period. Okay? But also in Hyderabad, you have the creation of a central bank in the 20s and 30s, which takes as a key strategy the expansion of commercial banks within the state. Okay? Added to those two factors is a third, which is the fact that Hyderabad is home to a number of very important Muslim intellectual movements that will become, especially after 1947, some of the key proponents for the Islamicization of the economy of Pakistan, and for some of the chief proponents for the creation of an Islamic finance system. Okay? So the most important of these associations is the Jamaat Islami, which is the brainchild of Maududi, pictured here at the end of the table. Now, Maududi writes a number of very important works on the problem of interest, or sood, as it's understood in Urdu. He's one of the key figures in articulating this equation of interest in the modern economy with that term riba that we had seen in the Islamic foundational sources. Now, Maududi is in no sense a sole figure propagating these ideas. In fact, some of the more systematic thinkers are people that actually rally around him as more or less disciples, and perhaps the most famous is this figure, Anwar Iqbal Qureshi. So he goes to Osmania for undergrad. He gets a degree in economics, and then, as you see from his impressive credentials underneath his name, goes to London for a master's and then gets his PhD in Dublin. And then he ends up in writing in 1946 this book, Islam and the Theory of Interest. So here you start to see the focus being put on this idea of the mudaraba. So the mudaraba is the beating heart of the current Islamic finance industry. And the whole idea in a nutshell is of equity. It's an equity finance partnership. So this institution had existed from the early centuries of Islam. And around the early 19th century, it never had died out in any sense, but it had become supplanted more or less by other institutions. However, academic economists like Qureshi, people like Maududi begin to focus on it as actually their blueprint for a future Islamic finance form. So again, there's this fundamental idea that Islam prohibits interest, but it allows profit and partnership. So there's arguments from within the Islamic tradition, but what's so fascinating with someone like Maududi or Qureshi or like-minded people is the extent to which they argue against the Islamic legal corpus. So they have very little tolerance for what I call in the book the context-dependent arguments for various forms of interest banking that Muslim scholars over the centuries had articulated in order to allow people to get beyond riba ban. Okay? So there's a very interesting intellectual exercise going on here where, again, there's an attempt to portray this as a fundamentally or authentically Islamic institution when, in fact, it had more or less gone under the radar for a long time. The second intellectual strand that they mobilize is Keynes. So they basically, look at Keynes and his various writings on the theory of interest and say this is actually proof that the Islamic system is the most modern of all systems because it alone has been able to essentially propound this idea that interest in a society is the natural order of things. So again, these are not in any sense intellectual reactionaries, but people who are reading very widely and literate in the latest economics. Okay? So from there, I trace how this then circulates to other parts of the world. So in particular, these ideas that emerge first in Hyderabad and then go to Pakistan, where the architects of these ideas encounter a lot of disappointment because their desire is to create an economic system within the country that accords with their vision, but they're essentially rebuffed. So from there, they have to find other avenues or other outlets for this model that they have propounded. So one particularly fecund area is the Gulf and Egypt, because in this period, you start to see the mobilization of new forms of Salafism that essentially grab onto these ideas of an Islamic economy that had first emerged in Hyderabad and then begin to systematize them more and more. So that's one important strand. The other important strand is the fact that you have bankers like Qureshi who move into the bureaucracy within Pakistan, or alternatively, go to work for institutions like the IMF, and then they end up in Riyadh or in the Gulf and begin to erect the financial system of those countries and implementing some of their ideas. Okay? Now, before we get to the endpoint of the birth of Islamic finance in 1975, there's this brief moment in the late 60s and early 70s of Islamic socialism. So it has a variety of different forms. You see it propounded in Egypt, you see it in Iraq, you see it in particular in Pakistan. And it's essentially this moment in which a number of different actors are wrestling with this idea of to what extent capitalism and Islam are reconcilable with one another. But to cut a very long story short, after an initial attempt by the Bhutto government in Pakistan to nationalize the industries and to implement an economy of Islamic socialism, the idea is abandoned after a very short period. And then you have a new form of state capitalism that is implemented under the military dictatorship of Zia al-Haq. And this becomes a way of Islamicizing the financial system in Pakistan, Islamicizing it in the same way that someone like Maududi or Qureshi understood that term. Okay. So in terms of our endpoint, by the early years of the 1970s, while the debates around Islamic socialism are happening, you, of course, have the rise of all of these petro economies in places like Saudi Arabia in the Gulf. Now, in the book, I try and stress again and again that from the 20s until the 70s, various Muslim entrepreneurs had gone to Riyadh and begged the Saudis to let them open up a bank, but they had been consistently pushed back against, and their ideas were rejected. However, now the Saudis are more and more receptive to this idea, again, because of the needs of the petro economy. And they begin to recruit a lot of Pakistani and Bangladeshi economists. Again, people like Qureshi who have that technocratic expertise, who have the PhDs from places like Dublin or Michigan State, and who can then implement these ideas. But again, it's a very sort of circumspect intellectual network. Many people who had the connections to Hyderabad, or people who had left Hyderabad and gone to Pakistan. Okay, so I don't really delve into the post-1975 story in the book in great detail, but one of the things I do try and stress is that despite the fact that this particular model of equity finance, debt-free equity finance, it does go global, that there's a massive expansion in the 80s and 90s of Islamic finance in a variety of different geographic settings that had been traditionally underbanked. There is nonetheless a lot of dissatisfaction with the model. And there's a lot of dissatisfaction with the model within South Asia itself. So both in Pakistan and in Bangladesh, initiatives like microfinance, like the Grameen Bank, have had very strong disagreements with officials and with religious scholars over what Muslim banking is and what it could be, right? So to wrap things up, there's no better way in my mind than to focus on a series of questions, okay? Now, these questions are really predicated on some of my dissatisfaction with what I see as the loose ends of the book, okay? So first is essentially, to what extent are the later sections of the book, especially when Islamic finance is implemented, to what extent is this a just so story? In other words, essentially, did Islamic finance merely triumph in the end, not because of any particular institutional blueprint that was articulated in Hyderabad and then this migrated out, but just because Islamic finance rode the wave of financialisation that got underway in the 70s, okay? There's also a corollary question to that, which is, did the relative success of Islamic finance compared to some of the earlier forms of Muslim interest banking owe to, again, just this moment of financialization, or really to the persuasiveness of this as a particular model of doing banking? And the last question, and this is what I'll end on, is what is this book doing for financialization more generally? So this is where I hope that many of you will be able to come in and sort of offer some ideas, because while I think the book is empirically very interesting and it marshals a lot of new archives and new materials, it is indicative of what I think is my greatest weakness as a scholar, which is an inability to kind of think beyond the material from the empirical level to a more theoretical level. So I would appreciate any feedback you have, but I've taken enough of your time already. It is very early in Australia, and I'm probably the last person you want to lead you into your weekend, but I'll leave it there, and I really appreciate you all coming out.
Thank you so much, Michael. That was fantastic. I think that what we should do is probably collect questions. So if people want to enter questions into the chat function or the Q&A function, we've got something. Yeah. So you're welcome to do that. But I think, I will actually abuse my privilege as chair, and just say a couple of things. First of all, thank you for that kind of vast panoramic, and generally I thought, very, very helpful window into, the book in terms of what it's trying to do. and kind of the arc of how its chapters proceed. I suppose, I mean, I'll keep thinking about those concluding questions that you have because I think they're significant ones. But the question that I have is actually related in part between the connection to the first book and this book, which is to ask a question about the kind of social history of this, and to ask about the communities that are participating in these forms of lending. Does it map on equally, is it Kojas, Memons, Boras, or do you see new kinds of actors getting involved? Um, and I know it's very difficult to aggregate with respect to what you said about the patchiness of the sources, but just to kind of get some sense of or ways of understanding kind of proliferation and rise of this form of interest-free or sorry, these forms of lending, and then which then becomes kind of interest-free. And the kinds of, I mean, you mentioned Mudarba, but before that, what are the sort of principles, or is it all kind of context dependent? Um, and the ways in which contracts are written up or not, if they are done by, if they're done by sort of word of mouth or by some kind of other sort of, informal ledger. So I think it would be useful to get a sense of that. And then also, who are the borrowers? I mean, you mentioned the kind of agrarian crisis, Great Depression, this sort of thing. And that's a really important moment, right? Of course, the colonial state conducts this great, inquiry into the depression in India. There's, of course, and before that, I believe it's 1918, maybe a little later, there's a sort of there's sort of inquiries into banking, right, and other forms of finance. So yeah, if you could just flesh out a little bit about the kind of social dynamics of who's doing the borrowing, who's doing the lending, and what do these agreements look like? Uh, because I feel like that would give us a kind of human face to some of the really kind of extraordinary things that you've kind of uncovered here and given us. I mean, it's a sort of tremendous effort of synthesis as well. So thank you. Yeah.
Great. Aditya, thank you so much. So the first book had talked a lot about two tensions in the case of the three communities that I looked at. The first was this tension between Muslim capitalists of Western India, so the Boras, Khojas, and Memons, and the Muslim gentry of North India. So basically the two groups that coalesce as the leadership of the Muslim League. But so that was one element. The second element of the book was the complaints that are made within the three communities that I examined about the lack of Muslim banks. So in this book, I'm not interested in sort of repeating that story, but the good thing is, the advantage from the material itself is that it's actually the gentry communities in North India that are most invested in this subject of creating Muslim banks. And that's both at the level of agrarian settings, so in places like Punjab, but also in the major cities. So in Lahore or Amritsar, these are the chief proponents. So it's a very interesting history in that sense, that it's not really coming from Bombay itself, or even really Karachi. It's places like Lahore or Amritsar that are the key drivers of this idea of Muslim banks. And then, of course, it shifts over time to Hyderabad. Now, the communities that are doing the lending, in turn, are multiform. So they're often described as Mahajans, and there's this conflation of the Mahajan with the Hindu, as I said, but there's a variety of different communities that are doing lending, including various Muslim communities. But there's this certain myopia that develops in these traditions of economic populism that says, oh, well, Muslims are not also lenders. They are just borrowers, and they are victims because they're in this perpetual state of indebted borrowing, right? Now, in terms of the principles, I try and stress really that the principles shift dramatically based on the geography. So we have this narrative of Islamic commercial law, that it is essentially this grammar that Muslims and non-Muslims use, that Islamic commercial law is this vast panorama. There's not many fissures within it. But in the book, I'm trying to point out the fact that the arguments in a place like late 19th century Ottoman Syria are very different from, say, late 19th century North India, because there's different traditions of Islamic law, and there's an appeal to different institutionalized forms of lending. So to just give you one example, in the Ottoman Empire, there's this tradition of what's called the cash waqf. The waqf is a pious endowment. And in the 16th century, some Ottoman jurists say that you can lend out money at interest from the cash waqf. However, that doesn't have any parallel in places like South Asia or Southeast Asia. So that is a very particular form that emerges in the Ottoman context. So when the Ottoman Empire disappears, then the big challenge is for, say, a Palestinian banker in Jerusalem is, okay, you can no longer appeal to this form of institutionalized interest lending that had existed. So how do you then articulate a new concept that would then gain enough currency within the local community in order to make it a viable enterprise?
All right, that's wonderful. Thank you so much, Mike. Do we have any questions from the audience? I can keep going. I've got tons of questions for Mike. Okay, so still waiting. So the other question that I had was with respect to the kind of theological disputes in terms of riba and the way that kind of is worked out. I mean, you alluded to them kind of earlier on. Now I'm wondering, where did this myth about Islam being against interest emerge? If I could just draw you out on that, and then why is it that mudarba becomes particularly attractive to kind of Salafists, Muslim Brotherhood, that that
Mm.
that kind of community? Is it a point that, well, other Muslim communities are okay participating in the mainstream banking sector? So how does this kind of work? And can we then see this? So those are two questions, right? Can we then see this as part of the sort of self-power? I mean, Kritika Varagur has written this book about Saudi money and the promotion of Salafism. Can we see this as part and parcel of that particular project, or is it unfair to kind of look at it in that way? So yeah, one, the sort of riba disputes, and then mudarba and Salafism and that sort of thing.
Yeah, for sure. So the part of the point I try and make in the book is that different Islamic legal schools over the course of history have had different understandings of riba, because they, of course, have different ways of reading the Quran. They have different hadith in some circumstances. And then, of course, they have different architects within a particular legal school. So you would see, for example, even within the Sunni tradition, among the canonical four schools, a lot of debate about what exactly riba is. Now, part of the reason why there's confusion is that one particularly famous verse concerning riba is in Islamic exegesis. It's seen as ambiguous because it was one of the last verses that the angel Gabriel articulated to the Prophet Muhammad. So this, and basically the Prophet dies before he is able to actually explain its meaning fully. So there's some ambiguity there in that sense. But you do see, again, within those schools, different arguments of varying variety about whether or not riba pertains to loans in all cases, loans that have any form of addition baked into them, or if it's also something that you can extend to commodities. But in no sense is there a sort of monovocal interpretation. But I think that the other important story here is the fact that in 18th century European political economy and writings associated with the Enlightenment, you see this stronger and stronger emphasis on the fact that Islam bans interest or usury. And so in the minds of some authors, this is a good thing because, and it's used as many of these Montesquieu type debates are used as a way of critiquing opinion within France around the legality of interest lending or usury. But what happens in the 19th century is that colonial officials double down more and more on this idea. right? That actually Islam bans interest or usury, and then that becomes the springboard for the circulation of this idea among members of the intelligentsia, like people like the Islamic modernists who emerge after 1857 in India, for example. They're reading these things widely, and they're immersed in political economy. They're immersed in colonial historiography, and so there is a process of the assimilation of these ideas. Now, the point about the Salafis and soft power is very interesting because, again, I'm not arguing that the way riba is understood by the Salafis is essentially the only game in town. That there's plenty of other voices that continue and persist, and different traditions after 1975 continued to propound an idea that the mudaraba is not the only way to practice finance authentically from the Islamic perspective. But what is the decisive factor for the Salafi version of the mudaraba is the fact that it's institutionalized. And it's institutionalized not only in Riyadh, but also in the Gulf and in Pakistan. So you have, in all of these cases, you have explicit state power that is giving its go-ahead to this particular version.
So I wanted to ask you about, I'm sorry, this is turning into the Mike and Aditya Q&A game, but the question that I had was about the equity stakes that are taken by the lenders. Now, even if you don't have a problem of usury, right? If your lender is taking an equity stake that is, fairly, I mean, because traditionally, right, in firms, that is considered a cheaper form of, this is obviously, a very stylized thing, but if we're, a cheaper form of lending than equity, right? Or at least, I mean, this is my, I suppose this is the sort of American stock market wisdom, right? Or, corporate capitalism. So again, that may not very work or map on well to the rest of the world, but the equity, there's something called an equity premium, right? Because the person who is taking an equity stake is effectively they are taking a greater risk in the firm sinking or swimming, right? And in terms of the seniority of the claims, right, you pay off the debts first, and then there's the kind of there's certain kinds of debt / equity financing, mezzanine lending, etc. And then there's the equity, right? So my question is, therefore, are there caps to make sure there's something, in terms of a sort of a moral economy of around a kind of acceptable band of equity stake? And also, just sort of conceptually, the question becomes then, we're so kind of wedded to thinking about banking with respect to interest, right? So in other words, does this category then, I mean, in a sense, we're sort of revising or turning that category on its head. And in which case the bank starts to look more like a private equity asset manager or something like that, right?
Okay, great. Aditya, can you just clarify for me the first question? Is it
Yep.
Is it geared more towards a setting like, say, the late 19th century, early 20th century, in which you have a system of borrowing and lending between a moneylender and for example, a Muslim peasant or a Muslim artisan or a clerk? Is this the paradigm, or are you talking more from the perspective of
Latter day. Yeah. Latter day.
Okay,
Yeah. So,
I see.
yep.
Yeah, I mean, because I could probably answer it with reference to the first context that I
Okay.
mentioned, less so with
Okay.
reference
Sure.
to the post 1975 story.
Sure.
Only
Both of
because
them would be fine.
yeah, okay, so maybe I'll run with the first one, because the post 1975 story is when my technical knowledge of the sort of Islamic financial products
Right.
begins to dwindle quite fast. But in terms of the caps of equity stakes before, like in a, for lack of a better term, a traditional lending setting, or even a setting, let's be more specific, a setting like colonial India from 1850 to 1947. So one of the big complaints with that 1855 legislation from the perspective of, say, the Indian Muslim intelligentsia or the gentry or the landowners, is that it basically reset the terms of the moral economy completely and between lending and borrowing. So, for example, if a lender, in the minds of the gentry, a stereotypical Hindu Mahajan, decides that he wants to charge an interest rate of 200% per annum on the principal, then the colonial courts will perfectly allow that, because that is the sanctity of contract, and there is no there's no dispensing with that rate in the context of the courtroom. And there's no backstop in terms of preventing expropriation of assets as collateral from the borrower. Now, what's very interesting is how different this moral economy of lending is from, say, the Ottoman context. Because there, not only do you have a continuation of interest rate caps, but the courts deliberately try and protect the property of borrowers. So if a moneylender comes to court and in a place like Ottoman Syria or in Ottoman Salonika and wants to charge an interest rate that, say, a Hindu Mahajan would charge, and then the borrower is unable to pay up and then wants to seize this person's assets as collateral, the court will actually intervene and say, no, this is not possible. You're not allowed to do this, and would strike the interest off the books and force the lender to actually forfeit their charge. So you see a very different moral economy, and of course, a very different legal system at work in each context. I'm not sure that answers the question. I mean, I know it doesn't on the face of it because you're talking about the later period, but does that capture some of what you were asking?
No, absolutely. That's really helpful. No, thanks, Mike. We've got a question from Arshad Ajmal, who with some comments. So he says, I get the feeling the talk is centered around a community that is Muslim trying to create an institution for themselves with certain kind of religious persuasion. So I'm interested to know what are the ideological foundations, the form of organization, and what the type of services and transactions done. And I suppose, we can, given that the periodization of Mike is kind of, pre 1975, we can talk about it, the kind of dispersed forms of lending, that and the kind of forms that rise and fall during that 1800 to 1975 period. So if you could maybe speak a little bit to some of those questions. I mean, I asked more pinpointedly on kind of debates around riba, but if perhaps there's this question of what are the sort of core debates in Islam that are interpreted in various ways by different schools that impinge upon this, and maybe not just about the question of interest, right?
Yeah, right.
And how is it embedded broadly, maybe in the kind of Islamic economic story as well as it emerges? Yeah.
Yeah.
Thank you for that.
Yeah, Arshad, thank you so much. It's a great question. So I think that there's a lot of different inputs here, right, that are driving the decision to create these banks in the half century or more before 1975. There's, of course, a lot of the debates within the Islamic tradition that we've already discussed, but then there's also that story of imitation, of trans-imperial imitation, that other Muslims are doing this and we should do it too. But also a very crucial feature is actually this process of imitating your neighbors, right? So if, for example, you are part of a Bosnian Muslim community in Sarajevo, you're starting to see that there's a Serb bank, there's a Croat bank, and all of this is being used as a vehicle of community uplift. In a very similar fashion, you're going to see an attempt to do the same thing within the Muslim community as well. So that story is repeated in almost every single geography that I look at in the book. So again, in colonial India, if the local Parsi community, or if a local Brahmin community or the Sikh community are founding a bank, then there's an effort to actually imitate as well. So these are, in a lot of ways, the crucial justifications and drive home what I had said earlier about, okay, yes, there are these intra-Muslim debates that are very important, but we can't lose sight of that sort of horizontal process of observing the other, so to speak, and copying what they're doing.
Great. So I think that's all that we have for the questions. So I think maybe it's a good time to kind of wrap up. Just want to say, I mean, the theoretical questions that you have, I suppose a number of us will sort of take back and think about, and then hopefully
Yeah,
this
I'd
will be a
appreciate that.
kind of
That'd be good.
springboard for future conversations. I mean, I feel like that's always the most difficult part for historians who are wedded to, I mean, we're kind of building up from the archive rather than coming with a specific theoretical framing.
Mhm.
Um, and so, it's something that I actually thought you did very well with the concept of not just the Jamaat, but also the notion of middle power in the previous book, right? And so there's something that's really I think compelling that we might have to spend some time thinking about to kind of wrap our
Right.
heads around. With that, I want to say a couple of thank yous. Of course, to Maria Mendoza and Erica McGowan who've helped organize this and the RSSS team. And but to again folks in the Capitalism Studies Network who are here this morning, but most of all to Mike who gave a kind of dazzling presentation and left us with a number of things to scratch our heads about. So thank you so much, Mike. And for those of you who are interested in further events of the network, we're going to have someone who, again, is Mike and my friend who's going to talk about the history of neoliberalism through a vessel, a barge, probably on campus in December here at ANU. So stay tuned for that, and you will receive further information. Thank you very much.